Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, let's take a look again on the gold market. So situation here is much better than yesterday, at least for those who are searching chance to go short in the gold. Here we have something that shed some light on the perspective. If of course this patience will work, but we have what we have here. So yesterday we talked about the possible bearish setup because as we have estimated in the weekly report that overall sentiment on the market is not very bullish. So mostly traders currently are closing long positions, and despite that market showing the upward action here, it could be, well, in reality weaker background could stand beyond this action, and that's why we just keep our idea that gold still could turn down with a deeper retracement. Now we have the first sign of that. So yesterday we said keep an eye whether we will get the grabber by the end of the session, and it has been formed right around Fib level here. This market closed below the MACD predictor. The grabber itself suggests a drop below these lows, significant action, but if market will stand in a row on the way to the downside and will drop below this area, well, chance exists really that we could get more extended action. What does it tell us? So for daily traders, if we trade on the higher time frames, it gives, well, nothing special. It just points that we could wait a bit more as we have chance to get better entry point to buy the gold. So if you remember, here we have traded the Brent body, if you remember, but once it has been completed, market has shown the sell-off. We have said that now we are waiting for a better entry opportunity. That was the first support here, if you remember, we oversold. Once this trade has been over, our position is wait for a next good support, and it stands around 18 even area. Because if you remember, here we have the OP of this ABCD pattern, we have the extension of the butterfly, and also here is a strong Fib level. It doesn't. I am not showing it on this chart. But if you're following our weekly reports, you probably remember that here is also strong confidence support, and that's our primary point where we could consider taking the long position. That's what the daily traders should keep an eye on, because for daily traders, on the weekly chart, on the daily, we do not have intention to trade gold on the short side, on the bearish side. Bearish setup for us is just good sign that we should get our gold at better price. That's what we could say on the daily. But those traders who trade on intraday charts who are searching chance to go short, well, this is good step to follow. You could consider it. It's very attractive because your invalidation point stands very close to the market, just above the stop. So market should not erase the grabber to keep the bearish short-term context. If it will jump up and taken out of the stop, this setup will be cancelled by the price action. So, and from that standpoint, you could place very tight stop. That's very attractive. On the 4-hour time frame chart, you could see that this reversal has happened precisely at the COP target that we have discussed yesterday. It's ABC top. COP level has been reached. So also we have garbage equal to sell. On the hourly chart, for position taking, you could consider head and shoulders pattern. So it's very obvious here. Left shoulder head, it's butterfly that we also have mentioned. It's a very great sign then, because butterflies very often becomes part of the head and shoulders pattern. Now as market comes to the neckline, here you can see this grabber another exists probably based on the MACD. Since this grabber, it should taken out of this low, so probably neckline should be reached. Then just consider the pullback following the head and shoulders. It means that the top of the right arm will be somewhere around 1975, or you could consider both levels for a position taken, either here or here. They stand very close to each other, but sometimes gold could turn a bit earlier, not reaching the major 618 level. It could be between the levels or even from the 30% level if pressure exists significant on the market. It could happen a bit earlier. That's why it's better to start to accumulate bearish positions somewhere from the 30%, then adding more on the 618. Market will climb here and a validation point right here, so above this level. So market should not erase this pattern and just proceed lower. So that's the nicely looking short-term stuff that you could consider. In daily traders, waiting for a great support area where we could consider again taking a longer term position on the gold.